right. Good evening, good morning to wherever you are in the world, or maybe even good afternoon. Hope everyone had a great weekend. And obviously, we're looking at the market tonight ahead of the opening bell. Should be an interesting week. Hopefully, everybody did okay last week. Jerome Powell didn't punish anybody too much. If there was any lesson that was to be learnt from last week, it was obviously that those kind of news events can be wild each way. We'll be taking a look at that and obviously the non-farms for this week. Hello, Shane. Hello, Maria. Hello, Kid. Hello, Doctor. Dutch, how are you? MC, good to see you in here. June, I'll be covering odd for you. Don't worry. I saw your comment on the video, so we'll have a look at odd today. Hey, Joseph. Good to have everyone here. Making a few stream improvements over this week as well. So for non-farms, we should have new overlays, should have better sound. Not so much microphone, but just more like maybe a background song or something that's going on. A little bit of stream improvements coming. So I appreciate everyone's feedback last time. We had a couple of technical issues, of course. In terms of the market, let's talk about what's going on. So what's everyone looking at this week? Definitely post in the comment section some of the stocks you're looking at. We'll do some analysis on those. And also I'll be covering the markets, obviously S&P 500. We'll look at the ASX tonight. Going to be looking at the odd US dollar. We're looking at gold, silver. We're looking at dollar index, and the list goes on. Hey Adam, hey Yajendra, good to see you here. So coming into the pre-market open, we've had a bit of a mixed kind of day. Nothing particularly big moving. I mean, we could see here oats, soybean, oil, wheat, all of those types of things. I just want to always let people know these types of investments for a new trader or even an experienced trader, even like myself, I don't really recommend them. They're very, very risky, and I think there's much better ways of making money. I mean, basically, you'd be better off buying Tesla at these prices than often some of these. The rollover contracts and everything that's hidden inside of the fees on these ones, very expensive. So that's definitely a game I would not get involved in. Obviously, seeing a bit of a move up here in, of course, crude, oils as well. Gold's pretty much done what we thought it would, which is have a bit of a bounce back up. Be hopefully seeing a bit of a pullback on gold at the start of this week and possibly then a run into 2000. We'll be talking about that. In terms of the crypto space, let's quickly cover over the cryptos. There is some movements in crypto. I don't know if anyone's looked at that crypto coin that went to, I think it's about $38,000 a coin. One of my mates was telling me about that. Wild. But Bitcoin's looking good. Nice technicals there. We'll look at that one. All right, so let's get stuck into it, I guess. Just quickly, Forex. Get rid of that. Now, remember, a lot of the things that I'm using on this stream, I always want to use free tools. So if you have other free tools that you want me to focus on, I do have paid tools. The problem is I can't stream them for copyright reasons. So if you have free tools and you think it's helpful for the community, let me know and I'll add them into the list. Yes, here's a great question from Shane. I'm going to answer this straight away. Shane, Tom, ASX started not to follow the US lead. Is Wednesday D-Day for the ASX with GB, I guess, talking about the gross domestic product figures. Now, in terms of what's going to happen with Australia and the FTSE, we have different indices. So pretty much the US lead, if we look at a heat map, we instantly know, just go to a 1 year, it becomes very apparent that the US is leading, of course, off tech, off innovation, and where do the best companies in the world, not just these FANG stocks, but these smaller ones, where do they all usually try to list? They try to list into America. So we've got really strong tech kind of innovation movements, and this is basically a massive change. I mean, obviously the internet has just been basically sped up 5 years. So you've effectively sped up the movement towards the internet, the movement towards out of shopping centers, out of that kind of movement, and businesses are having to go cloud. So that's why all of this craziness is going on. But yes, the ASX, the FTSE, all these indices that do not have as much tech in them, they are suffering and lagging. So for anyone out there in the US, if you've been looking at some of our indices out there, they are definitely not doing as well, especially Australia and the FTSE, the UK 100. The ASX has looked to rejected the 61.8. Yeah, the 6200 is very strong in the ASX. Let's actually start by looking at that, and then we'll go back over to one of these stocks I was looking at on the American index, which is Slack. Now, remember, everybody would know I have a bit of a rule with not trying to purchase stocks as they first come into an indice. I do not like that, but Slack has a nice breakout. Just quickly here with Slack, Got nice support coming through the 2780, obviously basically a triple bottom here, decent intervening trough at the 3080 and a nice breakout. So what have we got now in terms of technicals? We've got the 50 moving average, the 20, hopefully they would cross. Hopefully we see a bit of a sell off on Slack, come back down to this target level here, just above the 30 zone. And then we see that lightning bolt effect we always talk about on the channel up into 34. Just an interesting one. There's always decent amount of movement, and Slack I think is a decent company. I mean, we use Slack in our business. They do have failings, but in terms of just technicals, that's what's happening here. I think everyone can see that one. Hopefully you can. Nice bottom formation. Remember, in stocks, it's all about accumulation. We want to see accumulation. We want to see a little bit of volume breaks as it comes up. Usually you want to see an increase in volume and movement, which you do with the price action. And then we have that kind of retest, test out. We'll look at Berkshire as well, just to prove that point in a few minutes. Let's go to that ASX 200 straight away. So here is our, no, that is not what I want. It's the one thing with this code, we sometimes don't get what we want. All right, we will use this one. This one will be fine. So here's the ASX 200 for anyone that hasn't been looking at it. We have had that 6,200 strong resistance through there. Basically, it's been making a series of kind of higher lows. We had that one outlier day, but now it's certainly looking like it's trying to roll over. Let's do a bit of a top-down analysis on this just to show how little recovery we've had here in Australia compared to the US. We're still really at that 61.8 fib, as someone mentioned before. We can draw that up. We'll see a 61.8 fib. That's why so many people in the US were calling shorts around that time. Obviously, YouTube, everybody was talking about it. But the point is because usually you would see a fib like 61.8 be respected, and it would be a bit of a tough time to get through that. Multiple rejections. Now, there is a couple of things that make this very, very key. Remember, on the monthly, I always talk about these shooting stars being not as good as people think. They say pin bar and you think, oh, pin bar, the best candle in the world. Yeah, they're like 53% good. They're all about finding them in the right zones. Now, because we've got that 3-week rejection, it looks like being the last day of the month, we're going to have another rejection. Set alerts above here, because when you get price action moving through these resistance zones, and this goes for the S&P 500 for anything out there, it's a very strong price action signal. In fact, it's a point where you usually want to be buying it, and it usually moves to the next zone. So I think that 6,200 is super key on the ASX. Obviously down here is super key as well. Making a new low here, if we start rejecting, that will be a full rollover. So the monthly shows the key, I think, on the ASX 200. Down to the weekly, lots of rejections across the board. Again, multiple rejections. Just shows how strong this level is. A break of this, seriously bullish. All of these moving averages flatlining. The green ones, the 200 simple, 50, EMA, 20, they're all kind of flatlining at the moment. So we're stuck in that range. Yeah, Oxide, thanks very much, Gary. Can we expect S&P 500 pullback on open? Yeah, I think so. I think we'll look at the S&P 500 and we'll do some big analysis throughout this live stream. We'll just wait for a few more people to get in here, and then we'll do that moving into the open. Appreciate everyone attending tonight as well, of course. Adam says, I'm long the VIX. I think September's the sell-off. Well, Adam, you would be statistically correct on that one. Do I have the data? I don't think so. But basically, yes, there is a pretty strong correlation with September being a weak month. And I do have data for a video on that this week. I'll be releasing that one. All right, let's go into a few other things. We'll talk about gold and silver quickly. Did the S&P 500 slightly close above 3,500? It certainly did. Certainly did. Analysis coming soon on that. So I just want to talk about gold. We've got that here on the left. On the right, we've got dollar index. I think this is really worthwhile just looking at technically again. Very similar concepts we always talk about. Gold likes its 50s, yeah? It likes rotating 1900, strong buying. 1950 becomes a resistance zone or support zone usually. 2000 becomes a resistance zone. Now, does it overshoot these zones a little bit? Yes. And if we're understanding why it overshoots these zones, I'll use a rule that we use a lot in currency, okay? And that is that you usually have as 00. So let's go with 7200. Now, what a lot of people don't know is that 71.80 and 72.20 are actually key zones on this particular pair when it goes to the 00. Why is that? Well, when you're talking about stop hunting, where are people that are scalpers and intraday traders generally going to have their stops? Well, they have them just a few pips in currency terms above or below. So you actually see these being the dynamic or the strong resistance and supports in currency. The same system and approach applies to stocks, it applies to gold, it applies to everything. What we end up seeing is we have points where basically it's $50 or $1,000 or $100 on a stock. And when it goes to that zone, it often just overshoots, fakes out, takes out the stops and goes in the opposite direction. So like you say with the S&P 500, we've just slightly closed above 3,500. Is that a coincidence? No, it would have taken out some stops above there as well. 3,600 watch this week? Yep, absolutely could be. If it does hit 3,600 this week, EB, I would say that we are in for a blow-off for sure. We'll talk about that very soon. So yeah, gold, my thoughts are further kind of weakness. It actually kind of already came down just before and hit that 1954. I did some analysis on this morning and I had a target between 56 and 50 and I was looking for buy zones in there just because with gold, I think this is a really nice structure in the market. If we go down even into the 1 hour charts and have a look at how it's interacted with the zones, see how close, see how beautiful those 1 hour closes are. Does anyone else agree? That is good structure. That is what we want to see when we're talking about technical analysis. What structure is that? Oof, it's nice. I still, even after all these years, like a good bit of a good bit of structure in terms of just seeing strong resistance play out. It's beautiful when you see it because have we had a close above that zone on the 1 hour? No. And that means the 1 hour is a great time frame to be looking at because we had wicks, we had fake outs. This is Jerome Powell right here doing his thing, ruining the market. And then, of course, we had that strong breakout, come back, test close, and that's very nice structure throughout gold. Hopefully everybody sees that one. Said this on the channel for anyone that's new or hasn't actually subscribed or watched the video that I did on the weekend. This is the dollar index. I've got the monthly up because people that don't look at the monthly, again, you're doing yourself a disservice. Look at this resistance becoming support, 92 zone. We've just tanked into it. Is this an unrelated crazy tank for the dollar? It really isn't because the dollar's done this before. Look, the dollar smashes all the time. The dollar's been in some serious moves down due to monetary policy or just due to general kind of currency and fiscal policy movements. So if we get under 92, I think the market would do something like this. It would go down, come up, test that 92 from the bottom down, and then really it could be all the way down to this just above 88 previous resistances. So remember, the monthly shows us the key here. The monthly shows us the ability to find really good TA zones. Do I need a moment alone with that chart? Maybe. Yeah. Look, it's good when you see the zones. It's good. I think that's the thing with TA. Once you see good structure and you get your mindset into being able to see price action, you'll notice most of the charts on the channel, I don't put indicators on. Why is that? Because the indicators will show us the exact same structure time and time again. It'll always be the exact same kind of indicator signal at the exact same points, and you'll just end up learning them. All right, a couple other comments in here. So keep those comments coming. They always improve the stream. Even though you think September will be a weak month, do you think that heavyweights like Tesla, with the momentum it has, and Battery Investor Day will also have a weak month? It's a good question, Michael. I mean, I don't really know with Tesla. I mean, Tesla is just price action based craziness in terms of it's good. I mean, if you're in it long, all good and it's awesome. But I still think that you want a bit of a get out of jail free on this one. And what I mean by that is when we look at, what is this? Oh, this is the split. Yeah, of course. So when we talking about, I was looking at the price, I'm thinking, why is it $500? Yes, it's good that they actually brought across the proper data here on the TA. So basically these have big blow-offs. We know Tesla had a gap up. What happened after the gaps previously? When we get a gap up, we had gap up, big move like this, it were due for a blow-off in this particular stock. That's just the nature of it. May have one strong week this week into non-farms, and then I think would have a bit of a blow-off event. So I wouldn't be like saying, oh, I'd love the buy price right here. And that's just because TAs tells me, or just general kind of consensus tells me, that when we have these strong moves up, e.g. like this move here, which is now technically at 290 to the kind of 500 zone, then we're going to have pretty decent weakness coming through as well. Hey Solar, how are you? What if there's no back test, Tom? We all miss the trade. I think you're talking about structure previously. Yeah, if you're in an aggressive trend, the only way to really trade those types of things is to use pivots. So I've actually got pivots up here on the SPX. I had that for everyone a little bit recently. So here's a big trend line. I'll put it on the weekly quickly just so you can see this. So here's the weekly in terms of the S&P 500. These are all monthly pivots. I put monthlies on stock market pivots. They make a lot of sense. So I apologize about how it looks right now. But basically, we've got those kind of resistance highs, and that's trend lining out. Now, everyone will know on this channel that I don't really like trend lines because you can just curve fit them. I could draw whatever I feel like and make it up. But realistically, it is a fairly strong trend line. People will be looking at this. And notice it hit the R3 on the SPX. So that hit it on the real market. So pivots are a great way in uncharted territory to be finding profit target levels. And so are things like Fibonacci extensions. So we'll chuck them on the S&P 500 a little bit later. Tesla will get pushed up because retail can buy more. Look, Tesla's, my opinion only, maybe a little bit bubble-licious. And I think that there will be some punishing going on. And that's the nature of the trade over time. You look at the history of that thing, and it trades very aggressively up and very aggressively down. And it did so even when it was over here. Even when, back even in 19, it had a big sell-off in that year. Now, obviously, that was over profit concerns. But, when you look at it now, it's like, wow, it was $37, and now it's this much in the split. So it has really good growth potential. Elon's pretty smart. Scalping uptrend after test to blow off. Yeah, you can do that. We've talked quite a few times about how blow-offs work on these kind of stocks. So usually they pull back anywhere from 10 to 20%. They do it very aggressively, and then they try to retrace around a 61.8 to 76.8 fib. So anyway, to answer the other question, I want to go back to it. When we're in uncharted territory, how do we trade it? Well, one thing you can do is you can scalp it off very aggressive kind of trends. So you can use moving averages, and you can say, okay, are we seeing moving averages kind of being tested? So here we've got a 1 hour. We can see the 20 kind of gave us pickup zones where we might be able to get in. The other thing that you can do is you can look for the pivots in terms of looking for it to retrace back to central pivots and then pull it up. You can also look at things like fib extensions for take profit levels or possible resistance like Apple. What market order types I use, Ryan has asked. Well, I use a bunch of different types of market orders. So it depends what your kind of plan is. If your plan is to potentially short the market, I'm a big fan of options for that, option spreads. Why is that? Because shorting is dangerous, and I'm not good enough to possibly place the stop loss in the exact right level when it comes to going against the trend. Might pick the right zone, but I want to be able to not get hit on the stop loss. So I use that. If you're buying long stocks, you can use CFDs. Limits, obviously, if you're looking at a price up here and you want to target here, buy limits are good. But it depends on the type of pattern. You will end up using in your career almost all options or all types of orders, for sure. Bart says, I don't even think Tesla is worth $100 pre-split, so $20 now. Someone's saying Tesla's cheap. Shane, are you kidding? It's not cheap. I know what you're saying, though. I think you're talking about the split. Let's go over to this Aussie, and then we'll go back to the stock market as well. So a few people have asked me, I believe someone's in here about the Australian dollar. So let's just quickly do some top down on this. Same thing can apply, remember, to stocks, currencies, indices, whatever. So when we look at the Australian dollar, we know that it kind of overshot during this crisis. Notice again, we previously in '08 didn't see it go anywhere lower than these zones. It has been lower before. It was in the 50s and even 46s. But with the Australian dollar, it's had a big bounce up. This is partly due to, of course, printing of cash in the US and us not having as an aggressive monetary policy. If anyone doesn't know, I'm Australian, so that's why I say us. But yeah, look, it's very, very strong. A lot of bullish candles after each other. It starts to get me worried. You can't usually have too much movement. You did over here, but we're getting a lot of bullish movement. Let's go down to the weekly now. We could draw support resistance there, but I think the key is this one here. We had a shooting star, we had a rejection off that 200, and we're now above the 200 simple moving average on the weekly, and we closed above that. So I think that we could have a pullback, and potentially this previous resistance could become support, 72 kind of 60 zone. But the Aussie's looking very, very strong. And really, now that it's gotten through like this key resistance down here at the 70, we're up here now. Is this really key resistance? A little bit, might have a pullback, and then all the way back on to possibly even the 80s, and definitely 77, 78 is possible in this uptrend. We've got clear crosses now on the moving average on the weekly as well. You go down to the daily, and very, very strong. Obviously good pickup zones here off the 20. We know it's been hugging that zone as well. Look how many times it touches this 20. Wow. And that happens in stocks. Several stocks over the last couple of years have just hugged 20 moving averages all the way up. 1 hour, 4 hour. Apple did it. They all do it. Let's have a look at Tesla out of the gates, looking at a 1% pre-market move. Obviously a lot of interest over this one. So yeah, Aussie, I think there is definitely more legs in it, but I would be looking for a retracement, hopefully down to this 72.50. And for anyone that thinks that we're always looking for crazy dips in the market, I don't really say we're looking for crazy dips. I've been predominantly kind of long ever since we cracked that 61.8 fib, but it's just really, I'm just kind of looking at zones, and then you always want to have like your long hold investment portfolio as well. So usually I like splitting it between different things, different asset classes, different things. We will look at the CAD, absolutely, Harris. We'll look at that soon. Stocks at all-time high. Why is gold and silver are going up? It's got to do with the Fed. A lot of things to do with the Fed. Now, I shared this on the YouTube on Sunday, but I thought this was an interesting one. So if you didn't know this, after a stock market generally makes a new high, we actually see a 9.2% over the next 12 months following record highs. So by the statistics, we'd be looking for actually more growth on the market over the next 12 months. Now, that doesn't mean that you should go, oh, yes, it's going to happen next week. But certainly, if we do see dips, this is the statistic, and statistics generally don't lie. Like, obviously, this time we saw some of the statistics for the bear side get broken by the Fed. But when you've got the Fed put underneath you, why couldn't this happen? So interesting, 9.2% over the next 12 months. And I can tell you in my 12 years trading the markets, I've seen quite a few markets make all-time highs, and when they do, they often do go fairly ballistic. Thanks very much for your subscription there, Younggun. All right, go for a few of these other questions. So yeah, with gold, it's all hedges against inflation. People are starting to move money into other kinds of assets. So like I've got Bitcoin up here, and I think Bitcoin, it's already done it. Bugger. I mean, well, it's good for me, but yeah, I did this one I was talking about on the weekend. Bitcoin presents very, very good technical analysis right now. There's some great zones. So here we are on the 4-hour Bitcoin. I've talked about how 12,000, it likes its 500s. It bounced off this zone, double bottomed, really great structure here off that kind of intervening top. And then it's broken through and just continued on. So basically, you're looking for obviously the distance of the double bottom, and that really puts us back into this kind of 11.8 into 12,000 area. Strong price action, and this just shows you when you have that coiling of dynamic moving averages that all matter, the 20, the 50, and the 200. If you don't have those, put them on your charts. It really shows you how dynamic support is so strong. You've got structure coming through here, and when it gets through all those moving averages, they all become kind of like little army people holding back the market so that you can't lose in it. As in they're trying to bounce it up. That's why it's good to go with that trend. But actually all of it becomes key in this area here in the structure. When you see this, you should be very happy. It may seem like, oh, I've got to worry because it should have already gone up after it broke through this point here. But really, this is a massive benefit for you. It shows you the market is coiling at this area, getting ready for a nice breakout. PE for Tesla is no longer relevant. Yeah, it's all, well, I mean, it will become relevant. It's not relevant until it becomes relevant again. But yeah, at this time, I would say that it's not being traded based on PE. It's just being traded purely based on strong kind of retail sentiment. Thanks, EB. Yeah, just I see here question, or actually someone made a statement. I think Shane, 20 crossed the 50, that's a buy in Bitcoin. Yeah, look, it was really a buy here, Shane. The good thing about price action, it often gets you in before the movement. But yeah, there's a lot of interest in crypto this week off that one coin going up 75%. We'll get that coin market cap up. Just want to show everybody this coin. Hopefully it's in here now. Should be worth about $1 billion. Market cap bill. There it is. Yearn Finance, 36,000 a coin. Yeah. That's pretty cool. But yeah, this particular one's gone up wild over the last couple of like literally the last month. Very wild. It's actually a massive ascending there. But yeah, a bit scary this one. But Yearn Finance, 36,000 a coin. Is this week a good time to get into silver? Look, I won't give you any particular calls on that type of thing, mate. But I think that silver has many good properties, and obviously it's good in rebuilds as well. So as the government comes in and they start to do their infrastructure builds, new businesses start to do their thing. We just have to look at the monthly chart to know what happened after the crisis. Silver is actually the one that usually runs more than gold after a crisis. So gold kind of topped out obviously in 11 as well, but look at the run on silver. It was really epic in terms of percentages. When it's on for silver, it's on, and when it's off, it's horrible. We can see why the 28 has held it back though. I said this on the channel, I've said this a few times. This zone means something. This $28 zone, previous supports on that monthly became resistance. We got that excess, that kind of massive move up into 30, and now we're hovering around this zone. So we'll jump into silver's smaller timeframes in a second. But yeah, look, silver has more to run in it, that's for sure. It definitely could run quite hard. Problem is it's aggressive both ways. And we are in an aggressive trend for it. We go into the daily, what's happening. It's a nice big, oh, that's a nice close happening here. Haven't had a close above this zone yet. We've had wicks, but no close. Remember, closes show commitment of the buyers or sellers. So that's a very nice level there. And we're getting above that 28. So something like this is probably what you expect. Maybe a little close up, pull down, lightning bolt action, hopefully, back into the 29, back into the 30. That's a nice level though. Strong resistance, series of higher lows coming in. Remember, a lot of price action is really just understanding. It's not so much that you have to pick the exact levels. It's understanding the concept of what the candles are telling us. What are these candles telling us? Are they showing us that the commitment of the buyers or the sellers is stronger? Is the structure good? Has it been accumulating for a while? Is the volume good? That kind of stuff. So I quite like what you're seeing on silver here. Obviously, the daily matters the most because we go down to the 4 hour, and what's the structure telling us? Well, it's broken out, faked out before on the 4 hour. So daily close is the confirmation, not the 4 hour. This is our warning. Faked out before, we cannot trust the 4 hour chart. We cannot trust the confirmation commitment of these particular traders on this time frame. This is where they fake you and they get your money. And we don't want that. Do you buy real Bitcoin or are there futures on it? Yeah, there's heaps of futures. CFDs on it, futures on it. Yeah, Bitcoin's, and a lot of cryptos now have that. I don't personally go too much into long holding it. But yeah, if you're going to long hold crypto for a long period of time, obviously you wouldn't want to use futures or CFDs because as long as you're doing it unleveraged. Do I dabble in health/medial? I'm not sure what you're talking about there. Are you talking about sectors, health sectors? Yeah, if you look up inflation charts or if you look at like returns over time, so health care sector returns versus, let's see, other sectors. Let's even just see if a Google can bring that up for us. And you'll actually see something very, very interesting. Now, I'm not sure if these particular, just remember, I have to use free resources for everyone. I didn't prep this one. Yardini probably would show me. Let's have a look if this thing has any charts for us. What's this? Nah, this is crap. So anyway, basically you can get like sector charts, yeah? And if you have a look at the healthcare sector and you look at healthcare businesses over time, the cost of healthcare only increases astronomically when compared to every other sector. And that's why healthcare businesses are actually really good investments long term. If we look at in Australia, like obviously CSL is one of our big ones, and CSL has just smoked it. That's been an amazing share. People have got that share. You know, it's kind of like the Tesla, but the slow but steady kind of version. You know, it's going a bit of a fall off right now because the whole sector's getting rotated out of. But this is the type of time you go into these sectors and you say, well, are they fair value? Are they good value? Are they just having kind of their pullback to the 20 moving average, getting back into line? When we know this stock went crazy over the years. Look at that. Imagine having it back here, $1.66. That'd be sweet. But yeah, this particular stock has done very, very well. But you can see that this sector is not liked right now. The healthcare sector in general is not doing well because it was the one that everyone expected to make tons and bonus profits and everything like that. But it's going to be the slow and steady wins the race on this one. Yeah, I had a look at the Apple stock split dates, Ryan. Yeah, they actually went up into the split and they went up after the split as well. So the last split, we did that on one of the live streams. So I think we were covering off in 11 or 12 whenever it happened. And it was actually positive after the split. This is a very aggressive run though. I understand 5G phone and everything like that, but yeah, very, very aggressive run. We talked about the fib extension on this. Let's just quickly go down to the weekly and just talk about how to kind of chart uncharted territory on something like Apple. Is the stock going to be okay long term? Of course it will be. You know, it's a great stock. It's an awesome company, but yeah, in terms of where we were projecting it, whoops, just got rid of that. Let's get that fib retracement now. There it is, 2618, smack bang, hit it. Fell off, hit the 1618. We know once it hit that and rejected that the 2618 was going to be a good profit zone because that's the only thing it really was respecting. I mean, yes, there's a 400 around this zone, but it's interesting. It went straight to that fib and then started rejecting off it. Obviously now 125 on the split. Look, down 75%. Yep, we'll be checking that S&P 500. We'll do that right now. Debius says another green week, and then the week after there's a green week, and then the week after that's a green week. Seems like that right now. Yeah, it's been great for long buy holders. Obviously great for portfolios out there, and bad for people that have been waiting in cash. But that doesn't mean they won't get a pullback. So let's go over to that S&P 500. Just quickly, trend line here is where we're looking at. This is on the weekly, multiple resistance highs. We had the 18 into the crisis, all the way back as well, coming off this kind of trend line up here, and we just hit that. We also hit the monthly R3. Now that's incredibly rare. So on the real market, we hit the monthly R3 pivot. We'll see new pivots tomorrow. Obviously, I could get projection pivots, but at this point, I want to leave them until tomorrow. So it will be very interesting to see whether our pivots open up for the S&P. Because monthly R3 is incredible respect. Like, that is a serious movement. You do not usually see the market get to these kind of points. And that shows me there's a little bit too much aggression. I mean, it's not like these pivots were incredibly small either. They were pretty large range pivots. When we look at the market as well, look at what happened last time we had that big aggressive move. We had that pullback. Makes sense for us to have a pullback right about now. Not a crazy pullback, but just a little bit of a pullback. Does make sense. So let's go to the S&P 500. We'll pull that up now. Yep, we'll be looking at the Nasdaq, absolutely. By the way, anyone that hasn't subscribed, definitely consider doing it. Doing non-farm payrolls this week. Now that is an interesting event. I love non-farm payrolls. One of the best 1 minute chart wonders. Be checking that out. Just quickly here, I've got this chart set up. Odd yen, strong movement. Obviously, very strong bust here. Anyone tell me in the room, tell me right now, before we go over to the S&P 500, what does that pattern look like? I'd love to see if anyone gets it right. I think it's a bit delayed, actually. Anyway, I'll answer it for you. Ascending triangle, absolutely. Yeah, ascending triangle broke through. Wouldn't mind a retest back in the 76 to 77 area, but strong on the odd yen. Let's go over to the futures now on the S&P 500 ahead of market. Market open a little bit weak. Looking at a 35.06.07, obviously weakening down. We do have the 20, well, we'll quickly go over to the daily, I think is the best place. Just to quickly look at that 20. The 20 moving average now pretty much right round where the previous resistances are. So we did have that aggressive move away. Throughout most of this bullish trend, this 20 has been respected. Remember, when we've moved too far away, e.g. here, what's happened? Pullback. Are we too far away from it right now? It's hard to move the S&P 500 aggressively up. And we do know that, of course, it's based on the last 20 candles. I understand that moving averages obviously are always moving up based on the previous candles. They put weighted averages on those. But this is the EMA, so it is more weighted towards the most recent ones. PJ got it right. Demios, well done. And yeah, we were looking for roll reversal on that, so well done. So yeah, with this S&P 500, still looking for the pullback. I think it's hard to buy here. I understand people want to buy here. I think you're going to be looking over the next decade, and I'll just say this right here, right now, possibly one of the best stock picking decades that we've ever seen. And why is that? Because we're going to see big sector rotations all the time and possibly a bit of a dead index overall. And that's just, if you're used to kind of getting big returns, I think it's going to be hard to possibly bet on the index as much as we used to. That's what happened in a lot of economies. So you look at things like the EU, you obviously look at the Japanese index. They really stagnated for a long time. Didn't mean that some sectors didn't do well, just in general, we had that kind of movement. So yeah. All right, let's do some top down on the S&P 500. So we talked about how it hit the monthly R3 pivot. Definitely put your pivots on for tomorrow. Check out your monthly pivots, see where things are. Be looking at daily pivots as well. That'd be worthwhile putting on. If anyone's using TradingView, one of the better pivots to put on, just search pivot in here. Go down to probably just the pivot points. CPR is fine if you want to. That's all right. That gives you everything. And then you can go over to your pivot down here and right click on it, go settings, and then, you know, whatever you want to get rid of. Where were we? Go back over here. So we show monthly, or you can just show daily. So if we go down here onto the 1 hour, have a look at what the daily is telling us. See how well it's respected that daily recently. Not very much. I don't find dailies very good in the stock market. Usually use weeklies and monthlies. It's definitely worth having them on your charts though. So we'll get rid of that. Yeah, so from a monthly perspective, strong close above, obviously all-time highs. That signals that kind of further bullish momentum over the next 12 months. Obviously, the market is very comfortable that it is going long over the next 12 months. That doesn't mean there is no pullback. Go to the weekly, strong bull move as well. Of course, 33.96, this area here, still a target for dip buyers. Quite far away from that 20. Been talking about how that is important overall. It can't stay away forever, and obviously it will start to slow down, and the more it goes up, and if we get like a gap up, we're not going to get a gap up this week, but if we did get a gap up and then it kept going long, signals more of a blow off, and we'll look at that Nasdaq in a few minutes. Go down to the daily. Obviously we talked about this one, talked about where the kind of market is right now. That daily's still here. If we look at the structure on maybe a 1 hour into a 15-minute chart, what's going on there? Well, on the the 1 hour chart here, we've got still pretty bullish, kind of aggressive trend, very short, sharp buybacks in terms of the dips. This is obviously Jerome Powell. What happened there? The Nasdaq really shows the bigger, scarier story though. So yeah, just to quickly summarize on the S&P, I think we might have a bit of a rollover today, small kind of pullback. Maybe not too much aggressive trend, but just remember, if you don't already have it, get an economic calendar, non-farms this Friday. It will count. It will be important. Certainly will be important. So will it crash or never because of the Fed bubble? Look, I think the Fed have just pretty much proven they don't care about what's going to happen in the future. They don't care about the ramifications in 10 years, in 20 years of what's going to happen. In Australia, I guess a good example would be that we pretty much are using taxpayer debt or just debt in general to give everyone base wages. They're just prepared to do it because they don't want to deal with it on their watch. It eventually will create something terrifying, but not for maybe quite a long time. It could last 10, 20, 30 years. Yeah, some of the managed funds, actually, managed ETFs are doing really, really well out there. Do you think the US will end up like Japan in the 80s bubble? It's a good question. It could. Every one of these types of things is a different scenario. I think the US is a pretty diverse economy, which is good. I think that there's going to be definitely problems if they don't tax those big companies, though. Really depends a lot on the election, which is why we might see the market still stay bullish into the election. And why I say that is because I don't think, not to get political, but I don't think the Republicans are going to necessarily tax the big FANG stocks that much. And that is important because if they tax them, then obviously you see tax, you see reduction in profits, you get rid of a huge amount of, bullish momentum in the markets. China digital yuan, absolutely. Every single currency in the world will go blockchain. Every single currency. And why? Easiest thing to trace on tax. Imagine that. You have like a coin where you know where all of it goes. You know how to track it. You know how to do everything. It's the easiest thing in the world to police. Absolutely. Everything will go digital money. And that's what kind of worries me about some crypto. I mean, my opinion has always been that I love crypto. I love investing in the concept, but which one is going to rule supreme? I think every country is just going to create their own crypto. Pound Swiss 4 hour. Might take a look at that. Let's look at this US 100 though, because really that's the sentiment driver. We'll look at the Dow as well a little bit after this. What is the US 100, the Nasdaq, telling us? Well, we're actually approaching that kind of 12,000. That's interesting. We're just sitting here on this 1 hour. What are we seeing here? Well, this is the 50 EMA, this blue one here. Now notice in this bigger bullish aggressive trend ever since kind of we hit past that 11.4, we've respected this moving average every time on the way up. What if we bust through here? We're also busting through a lot of structure. We've got a lot of structure going on the 1 hour at 12,000. That'd be a pretty bearish kind of signal. We have not busted a close below that zone for quite a few days now. And obviously it's a very aggressive trend. Shane, criminals still need a currency. Isn't that like Monero and those other kind of things? Untrackable currencies. Yeah, it'd be hard to be a criminal. You can't do cash anymore. So yeah, US 100, that is interesting. Go quickly top-down analysis on this rocket ship. I guess I thought this would hit the 11.5 after it broke that channel. Talked about 11.5 to 11.6. 12 made sense purely from a psychological standpoint once we got through the 11.6, but that's a very aggressive close. This is now 1, 2, 3, 4, 5 monthly incredible bull candles. It's a lot of incredible bull candles without one bear candle. Imagine if we go 6, 7, 8, or 9. 9's like record. Here we had 1, 2, 3, 4, and then a bear candle. 1, 2, 3, 4, 5, and then a bear candle. Obviously, this is the crisis. Usually you don't see this kind of big movement without big pullback. But again, the election year, I'll be doing a video on it. Make sure to subscribe to check that out as well. I'll be doing full analysis on September, election year, stats, all of that kind of good stuff that usually goes on. Because we know the Fed is fully manipulating this market right now. Fed has printed over 25 trillion. Is that high? I mean, in terms of their asset sheet, I don't think it's that high. No, the asset sheet's a lot less. Here we go. Ryan got the details on Apple splits. June 9th, 2014 went down 5%. February 28th, 2005 went down 13%. June 21, 2000 down 20%. Damn. That was during that tech bubble bust. So there you go. Possibly we could be seeing a bit of hype, buy the rumor, sell the fact on Apple. So yeah, on this monthly, obviously 12,000's hit. That's important. We'll see what the pivots do in terms of opening up. I think really it's all in the small time frames for the Nasdaq. I think the most interesting thing we'll see today is really just that we had that 1 hour, we had that 50. If we're looking at the daily, you can see here, again, pick up aggressively across this entire trend. Now, look how important this 20 has been to this trend. I'll just reinstate this every time. Buy, 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 buy. This is all that's happened. Buy, buy, buy. The 20, buy again. So every single time, it's just bounced off that 20. Will it happen again? Yeah, good work, Ryan. That's some good stats. You like 5... Oh, you were listening the other day, Jeremy. Very good. You like 5+ years on public companies. Do you have other criteria? So for anyone that missed that, yes, I like 5 years on companies. Now, why do I like that? It's kind of like my version of a Warren Buffett rule. I like the idea that if you have a company that's been around... Wait, let me get the 5 ready there. That's been around for 5 years. Effectively, they've had several quarters, several years where their books have been overlooked by the market. They've been understood and they've been fairly priced. If we look at most tech companies when they come in, Facebook's an example, Twitter's an example, really anything. I mean, in Australia, it was a legal firm, Slater and Gordon. They all came on the market. They were on for less than 5 years and they came in hot. And then they were certainly not so hot a few years after. So I like 5 years from that aspect. In terms of other rules that I have, yeah, look, I just don't buy, I do not buy, I guess you would say specs. So if a spec's been on there, like those kind of cent companies, 10-cent penny stocks, very many Americans will call them. The reason I don't buy them is I think they're fine to buy if you have like maybe, let's say your play cash was $1,000 or $5,000 or $10,000. That's okay. But I don't buy them with huge parts of portfolios. It's a way of going bust. When do you sell the fact? Well, that's actually something that I think is difficult to do in this market right now. I think it's hard to sell the fact. I think the best thing to do is really just buying those kind of dips. But you just sell the psychological zones. That's the concept. But very, very tough. Remember, trading in the direction of trend is the better way. Remember, the Fed has basically stopgapped some very good technicals along this bullish trend. Some very good technical sells have been stopped just before they confirm by the Fed. The Fed intervenes in those points. They've done very, very well. Amazing. Bitcoin is already the currency of the dark web from Shane. Yeah. Look, Bitcoin's got that kind of inherent knowledge. Everyone knows about it. It has a value because of that. Gold has a value because we all know about it. Throughout history, everyone's always understood. Is gold that useful? Not particularly. I mean, obviously, we see it as a store of wealth. In fact, silver is more useful. Yeah, good work, Ryan. I do like those stats. Just another kind of proof here of when things make all highs and they've got good technicals, we often get the buy zone. So I've got this kind of channel drawn up between the 10.5 and the 11, which is where we kind of called that 11.5 kind of movement. We saw it break through. We saw it come back down. Obviously test the body closes here, the 20 as well, and then buy back up. So it just shows you that when you get a nice breakout, you got good technicals, good structure, all that type of stuff, you often get that pullback. And again, I expect that to potentially be happening. Not long now until we get the markets open. Let's have a quick look back at this thing just here for a second. I just wanted to talk about a few moves that happened over the last week. So if we go to 1 week, and for anyone that doesn't have really cool screener device, definitely finviz.com. If you don't have economic calendars, Market Watch, or something like Forex Factory, definitely worthwhile putting on your list of things to check out regularly. Like this from the Ford PE. It's really nice being able to see the expectation of the general analysts in terms of what their Ford PE is over the next 52 months. There's a lot of red in some of these areas. Obviously high PEs, but PE is tough right now. What I'm liking is 1 week, 3 week, 3 month kind of performance. Why am I liking that? Well, it just shows me a little bit of sector rotation without having the more advanced tools. We can instantly see healthcare is unloved. It's an unloved area right now. It was the number 1 loved area at the start of this crisis. Now no one likes it. Utilities getting a lot of hate as well. I'm sure there's reasons for this as well, but from a technical perspective, there could be good structure forming on these for breakouts in the future. Obviously, I spoke about tobacco last week, said how that was in some nice, strong kind of moves, had a decent breakout, decent rotation. Banks continue to be good. I continue to be terrified by the regional banks. That doesn't interest me, but they are there. I always think about risk to reward. Remember, with everything that you're doing, would you sleep well at night being in some puny bank in a crisis? I don't think I would. But would I sleep well at night being in a high quality company? Absolutely. Selling is the hardest? Yeah. PJ, absolutely. Selling is the hardest thing to do. Thanks very much, everyone, for attending this live stream, by the way. Appreciate that. We're doing a non-farms on Friday. So you can see Apple really kind of stopped after it hit that 2618 fib, everyone. Obviously, Facebook, Google trying to play a little bit of catch up here. Microsoft had that stagnation in it as well, if you look at it on the charts. Yeah, so there's definitely some stuff here. Let's have a look at 3 month performance quickly. Again, you'll notice healthcare sector not performing that well. Go to a 6 month. It's doing okay, but that's when you start to see really the kind of pain train from the regional banks and obviously Wells Fargo, those kind of things. Coke's been one I've looked at quite a few times for buy potentials. Yeah, very, very interesting. What is this, 6 minutes too? All right, we'll take a couple of stocks that people are looking at. So where do I think Apple and Tesla will be in 10 years? I think Apple will be worth even more. I think Apple have room to expand through so many things in their system. I'm really surprised Apple haven't pushed harder into the TV sector. I mean, I know they're trying to, but even their Apple TV, they need to update that more often. Apple have room to do very, very well. Tesla broke and Apple innovating, says Shane. Tesla will certainly go down as it'll go down as a documentary for sure. It'll have like cool interviews with heaps of crazy traders that made probably millions of dollars, and it'll certainly be telling some amazing kind of rags to riches, and then also busts, I think. And not from the company busting, but just from the wild moves that it'll have over the next couple of years. I have no idea whether Tesla deserves its value. It'll have to prove it at some point. I would have thought it already had to prove it, but obviously it doesn't. But it will have to prove it in real hard profits. So I said before, 5 minutes before, we check out that Berkshire. I want to have a look at that. Yep, Apple has making their own chips. Yep, that's a big thing. They've done obviously very, very well with making their own chips in their phones. So we'll look at Berkshire B just quickly here. I just want to show this great technical. This is a great buy. Glad I covered this on the channel a little while ago. So I talked about how getting through here, we obviously had the earnings report. Earnings report was pretty solid. Did the nice pullback into this kind of zone here. Nice double moving average behind, just above the kind of 200. Very, very strong kind of level that we're approaching here. And now obviously we've got a new high, really signaling that Berkshire wants to go back to the 228. I do like this company, I always have. But very, very nice technical buy. Remember, don't buy the kind of like rumor into the announcement. The announcement was good. Hey, Berkshire made some money. They did all right. But at the same time, there was that nice sell-off dip. There is potential in other stocks, everyone. There is potential in other stocks. And this isn't, an unknown stock. It's definitely a very well-known stock. Let's actually have a quick look at Disney as well. Now, this stock, I think, has had a very similar pattern on it. Again, we had that 200 simple, the 20, broke out, came back down, 126, bought up. Tesla will be sold within 10 years, in my opinion. Prove it with profits, not VIN numbers, says Logan. Do I recommend Tesla? Well, I'm not going to recommend anything in particular, but yeah, I think Tesla is a trade. I think it's a trade more than an investment right now. I think you want to have plans and everything. Just a quick reminder to everybody. Again, get your calendars out this week. Non-farm payrolls. This is the expectation. This is where they want unemployment to get to. Obviously, have they been correct? They've been all right. They've been all right. The analysts, the monkeys, they've been good. They've been pretty good, actually, with the non-farms. Not here they weren't, but this is incredibly hard for them to get the figure right. Non-farms is an exciting event, so definitely subscribe and come along to that one on Friday. It's going to be good. If you haven't seen a few live, you got to check them out. They are exciting events. Johnny Bravo says we've got some stuff leading the market. So XLV, healthcare sector, nice, good breakout here, by the way, everyone. Nice amount of structure, nice amount of formation. It's over a while too, over July. So what's this? Spectre Trust healthcare sector. Yep, nice. I like the structure there. It's had good history when it breaks out. Obviously broke that high, came back down, tested it, just similar to the S&P 500. It's like a massive inverse head and shoulders if you're talking about it. Left shoulder, right shoulder, head. That'd be pointing for some pretty big moves. Let's have a look at this on the monthly just quickly. 1 minute. Anyone hyped? Let's get that market opening. Let's see what happens. We'll get on that chart in just a second. How many minutes have we got? 30 seconds. Obviously big run up in this one. This just shows you how aggressive the sell-offs can be, though, when they come in on stuff that's moved up very aggressively in the growth. All right, let's go back over here. Let's go that Nasdaq. Nasdaq's probably the leader right now in terms of what we're seeing. From a chart perspective, this is the one I care about the most. A little bit of a move up here to over the 12,000 again. Coming to the market open. All right, here we go. Is that true, Logan? Well, I hope he's doing better. Yeah, absolutely. Healthcare's unloved at the moment, Johnny. In the last couple of weeks. I mean, what's it been, like a month? It's been sitting in that structure. All right, so we've got this open coming in. We'll just quickly look over that dollar index as well, see what movements are going on there. Seems to be opening pretty flat. A little bit of selling coming in here as well. By Friday, I'll have some software as well for everyone, so we'll track a few stocks coming in, some leaders and laggers and stuff. I'll use one of the other paid softwares I've got. I believe I'm getting approval to show that, so that'll be good. Dollar index, not really doing too much. Gold, obviously, just sitting around. Back to the markets, I think. We'll load up 2 markets on this. We'll load up SPX. And we'll just load up the US 100 in terms of the futures. Oops, I need the US 100. There we go. Get this down into the 15-minute charts. Remember, on that 1 hour for the US 100, I'll be looking at that 50 moving average EMA. We were looking at that before. It's pretty important, I think, to check that out. S&P 500 coming down a little bit. There is a lot of structure here. This is actually ascending triangle on the 15-minute triangle. I don't particularly like 15-minute patterns. I'm not a big fan of technicals on these smaller time frames. I find a lot of them are robot traded, and I think that what you were seeing 12 years ago was technicals were pretty good on 15 1 hours and worked pretty well. But I think right now it's all about the 4 hour, daily, possibly 1 hour in terms of technicals. Definitely try to stick to those charts. Few people want to get into Apple, obviously. It's interesting. I think all the interest right now, I'm just seeing it in the comments and everything. It's all about Tesla. It's all about silver. It's all about gold. Obviously, we've also got Apple. And not many people are talking about too many other stocks. VIX is up. Yep. So got a little bit of movement here coming into the Monday open. Obviously, looks like more kind of strength, more coming from Nasdaq stocks right now. Fair enough, Johnny. No worries. Mastercard. That's a good one. Let's check that out. We'll load that over here. It's a pretty decent sell-off there going on on that 15-minute chart. So this is a good one because I know it's obviously had a bit of a run on it. Now, generally speaking, the way you kind of work these runs out is you usually take legs, as in you take kind of moves of the market, what it did previously, and you try to figure out whether there's some reoccurring kind of thing that's going on in the market in terms of the structure. Now, because of the move we had down, this leg's probably a little bit too aggressive to get off that. So I'd probably be using more of a fib extension to try to figure out whether it's hit kind of levels that make sense or levels that don't from a technical perspective. Draw that fib extension up. This won't be exact, this fib extension, purely because this won't magnetic lock, I don't think. We'll just go to the bodies here. So we've already hit this fib extension. I think even if I drew it down to the bottom, we've hit that fib extension. So we're probably a little bit exhausted here on Mastercard. But it's going to trade probably to technicals, as in like key psychological zones. Usually would have expected to slow really around the 350. And then the next target would be like that 380, 400. What I do with Mastercard is also go over the previous history. Does it stop usually just before double zeros in its big bull runs? Does it respect the 200s? Does it respect more of a 20 underneath or a 20 above? I mean, here we're seeing a 20 underneath and a 20 above. 220 and the 80. If we look at the resistance over here, it stopped at the 80. So maybe the 80's more important. So possibly it's 380 for Mastercard. But every instrument will trade slightly differently in its psychology. So it's always worthwhile checking that out. So is this trading view free or paid? Look, I got the premium just for being able to show a few things together. but usually it can be free. It's good. I like it mostly because I think with trading software, a lot of TA software out there is not that great. Like a lot of American platforms, they just don't have very good technical analysis platforms. It's nice to be able to go in here and do your execution on another platform. It also keeps it out of sight. Remember, one of the biggest dangers to trading or investing is being able to take that profit like that. How many times have you had a bad trade and you take other trades that are already profitable to cover that bad trade? And then you're like, damn, I should have left them on. So try not to leave that, kind of thing to help you. I like to do the analysis in a separate platform. And TradingView is one of the best because it has all the charts. If you ask me something, I can probably find it on TradingView. NEO selling off. Now, NEO is a stock that I wouldn't touch with a 10-foot barge pole. This is one of those ones that I have very little faith in. Don't downvote me for that. It's just not for me, all right? It's not for me, this one. I don't understand this at all. And I don't tend to. I think you can still trade it, but yeah, look at that aggressive move. This is a blow-off, full blow-off going on right now. And it's not unknown. I mean, it blew off last time as well. Is this the real NEO? I think it is. Yeah, it's pretty crazy. So we're going to come test this support now, which was resistance. So resistance becomes support on the market. 3,500 being tested right now. Let's go back over to that. Let's literally load up AAPL just quickly and have a look what Apple's doing. Obviously, that's probably the most interesting one of the day. Does this even reset correctly? Looks like we've got some broken charts going on here. Because of the way that it obviously split up. This will be interesting to see what happens on Apple over the next week or so. Yeah, Johnny, every time I hear people speak of the VIX, they imply downside. So when you mean by that, you mean in terms of fear. Yeah, well, look, the VIX is known as the fear index. So obviously if the VIX is spiking like it is right now, there's obviously a level of concern coming into the markets. The VIX pretty much is proven that, I know it, like a lot of internet articles will say, it's not 100% proven statistically, but when the VIX is spiking, it means uncertainty. That's the nature of it. And I've always said below 20, you're pretty much in a normal trading market with normal volatility. While you're over 20, you have that ability to get that flash crash, that 5-6%. And remember, the statistics actually say if you ever see like a 5.5-6% crash in in a day or 2 days, often, or especially one day, actually the next day is statistically likely to be a buy day. Very statistically likely. And in fact, it's statistically likely that the coming months are going to be very green. It's bizarre. And it's because Wall Street use it as a way of flushing out retail traders. Keep the questions coming. More than happy to answer as many questions as possible. Look at a few other things, but we do have the VIX spiking over here a little bit coming into the open, which is very interesting. Obviously, there's a lot of news this week, a lot of key news, non-farms on Friday, a bunch of other things going on. Did find some support here on the smaller time frames. 3,500 was sup. Obviously, we saw a couple of point increase on that. Not the kind of thing I get interested in, but it was there. Yeah, so VIX spike is interesting. I said before I'd just quickly cover off CAD. This is not the correct CAD, so let me just quickly load that up. Quickly look over here at this healthcare sector as well. Yep, it's nice. Looking for a breakout to a new high. And remember, as I said, with this one, it's been structuring for a long time here. Quickly look at that US dollar CAD. So we're still testing these kind of lows here on the CAD. Really, for any longs, you would need it to break past the 131.00. I've done the analysis on this a little bit, but you would need it to get above there. And then you'd be struggling strong into the 131.40. This is a super roll reversal area. In fact, I'd be looking more at shorts here. So let's say we got a pullback up into this zone, this will be a very strong shorting area. Look for lightning bolts. Always important, look for lightning bolts. Another tip, if you ever have like a zone that you're analyzing and it isn't like a multi-touch 3-4 hit zone, like I call the 1, 2, 3, then set your alert, come in and wait for confirmation on a smaller time frame for the reversal in the direction of trend. It will save you a lot of money over the long term. By just waiting for this kind of lightning bolt action, you will save money, a lot of money. Is Coke a good stock to hold for 5 to 10 years? No, history would say yes. I mean, Coke, obviously, the one good thing about Coke is that it has kind of fixed its business, as in Coke's well known for buying out kind of its competition and then kind of destroying the brand. And they have too many brands, like they don't know what the hell they're doing. So you'll notice I have some key resistances here. I was doing a bit of analysis on spreads and stuff down here at the double bottom. So obviously we're targeting spreads up here. So a few reasons of that, but I won't go into it. And then of course, strong resistance up here. So nice break off at the 48, straight into the 50. Now we're at the 50, probably find resistance again. Probably expect the market to come down now for Coke, come back down, test the 49 area, 48.50, and then bounce back up. It gets through 50, lightning bolt up, and we'll be seeing some quite strong structure through Coke. This is a very nice chart on the daily. We get the daily, we'll see that. Coke has a beautiful structure in it, everyone. That's a very nice. We'll get rid of these lines. Get rid of them. Look at that. Very, very nice structure. Love that. Take the range of this kind of thing. Gives us a good target area as well. Big channel. Big channel. 200 simple, just sitting above it as well. 55. 86 kind of area. Previous resistances. Pre-crisis, obviously. The thing with Coke, and this is why I kind of like these companies, and it's not good to prey on this, but it's the reality, is unfortunately these stocks do really, really well off one thing, and that is people not being that happy. Unfortunately, people go to their crutches, which is drinking Coke, eating sugar, eating McDonald's. We are in high unemployment. Historically, these kind of companies do well during those times. Obviously, they're getting propped, so they are going to get paid some money by the government and stuff. But at the same time, these are the kind of stocks that do well over these periods. What indicators am I using here? Just simple moving averages. We've got the exponential for the 20, the 50, and 200 simple moving average. Hopefully that helps comedy. Yep, 3,500 being tested on that S&P. I assume it's rebounding a little bit off that. Makes sense. Probably then we'll start to short off again. Currently 35.06. Yep, makes sense. It'll look a strong kind of structure on the smaller time frames, as we said. Just quickly go to the daily here. Looks like we've got our new... Do we have our new ones? Oh, these aren't the pivots that I want. There are our daily pivots. We'll get the new monthlies tomorrow. Coke should have heaps of things. I think Warren Buffett once said you could have a monkey running Coke and it would still be a profitable company, and that's why he owned it. And it certainly feels like it hasn't been managed well. There we go. Someone said 150 brands in the portfolio. Anyone remember Nutrient Water? Gah, Nutrient Water. That was a joke, wasn't it? How many different Cokes were there? Was that Coke? I think Pepsi had the worst one. Pepsi Samba here in Australia. If anyone ever tried that one, or if you're a Pepsi Samba fan, definitely I am not. Pepsi has Doritos. Yeah. Dr. Pepper is the new Coke. Yeah, Dr. Pepper certainly has some fans. I don't mind Dr. Pepper a little bit, but very infrequently for me. Thanks, Johnny. Appreciate that. All right. Well, look, the standard kind of Monday here. We've got, a little bit of movement coming in. Obviously here, the Nasdaq is rotating a decent amount. I mean, this is a nice little pickup here, 0.3% on the smaller time frames. Not too many other moves, I don't think, of note. I do see some nice structure here on Coke, though. I'd definitely be setting alerts there for those levels. Let's have a quick look at the metals. see how they've performed, and I'll go over the heat map. Friday is going to be where the real action is this week, though. May see some bullish movement into Friday. That's possible. Remember, the more the market bulls, especially the more aggressive it bulls, the more likely we are in for a more serious kind of dip process. But at this stage, look, it looks like we're set for another kind of 7-8% over the next 12 months on the S&P, just based on stats alone. Go to the futures tab here. Yeah, Pepsi also bought SodaStream. So I think the most interesting thing is the VIX. The VIX is the key here. The VIX continues to rise and the market continues to hover. It really shows that there is a lot of uncertainty and the explosive move could be to the downside. So definitely check that VIX out this week, everyone. Crystal Pepsi is the all-time worst. I have not had it. Crystal Clear. That sounds like some kind of drug. XLU leading. Yep, so you're looking at all the sectors there. It's good. Good thing to do. Anyone that's not looking at sectors, I think you're making a big mistake in your analysis. Sectors are cool. You look at your sector analysis, and we'll do a stream like this where we'll go through the sector analysis and then we'll go into the stocks in the sector and we'll do a screener off on them. It's one of the ways I find things, because when you're scanning heaps of stocks and you're looking for heaps of potential, how can you look at them all? That would be insane. So you either have set parameters, which is really hard to set up, or you have look at the sector, and my big thing is try to buy the biggest, bestest companies and then buy them long in good dip zones or good structure zones, good breakout zones, etc. Why do I do that? Because the best companies, they usually have that chance that even if you think you're wrong or you are wrong, they can come back. So if you're going to hold the position a little bit longer or even average into dollar cost averaging on it, well, you're fine. But guess what? You do that on a penny stock, whew, it can be bad. You don't want to do that. I learned that. My best penny stock over the last couple of years probably been marijuana stocks, but I got the hell out of those. Oh man, they went up like 150%. I was like, goodbye. I think they kept going too. They kept going. How do you load sectors? You need the codes. Look up the codes. So Johnny's been giving a few codes out there. There you go. Billionaire George Soros places bet on 3-year higher yield dividend stocks. Wouldn't really bother following these people too much, but fair enough. Nice ascending triangle on silver. Yes, we talked about the silver. Had a very good patterning on it. Absolutely. Water brands are everywhere like coffee shops. Yeah, so many water brands. You should try raw water. I heard in America there's raw water. Supposedly it's like literally like the water is like tainted basically, and you pay like $50 a liter for it. Yes, absolutely, MC. Yep, absolutely. CSL, yes. Unloved sectors, guys. Unloved sectors. I watch the sectors to see if all fall together or not, to avoid not being ready for a crazy sell-off. One thing, Johnny, if you don't have a plan, hey, and you're not ready for a dip, then you're not going to be able to pull the trigger when things happen. Because when things happen and you hear all this noise and you hear my YouTube video or somebody else's YouTube video or Bloomberg or some expert say, oh, it's all happening, the crash, whatever. The thing is that you need to have a clear head where you say, this is my plan, I stick to this plan. Maybe that is the S&P 500 falls or your favorite indice falls 10%, and then you look to make those purchases. So absolutely. I think having the plan is the key. Always understanding what you need. My thoughts on the Tesla rocket ship. As I've said a few times during this stream, I think Tesla is a trade more than anything else. And I think that obviously it is going to have some serious dip moves and blow-offs throughout this kind of bull run. And one day, not so much in the next 6 to 12 months, but one day, these charts won't load probably because of the split, but one day they will be accountable for making a profit. And I think that's when you're going to see a growth stock go potentially quite wrong. Yeah, the long short guy, Michael Burry, yeah, he predominantly invests in water stocks. Hey, look, agricultural stocks, not necessarily a loved area. Going to definitely have problems with these kind of serious weather events that were occurring nowadays. So I think agricultural stocks are a little bit unloved if you look at them in the general sectors. Fair enough. I think actually I was having a look, you know what I was looking at today? And I was looking at ARK. Just to basically, not the game, ARK Investments. Now, it's interesting to see the way that this lady has done things. So I don't know if anyone follows this this particular investment style or the way that this person's made a lot of money, Catherine Wood, but the way that it's investing, it's actually pretty smart. And I think, like, obviously she's made some great money and she has some good assets under control, but it's an interesting concept. While it might be too expensive right now, the dips and things and the kind of way that they invest overall, I think it makes a lot of sense. I'm a big fan of moat, so I'm a big fan of the concept of having a high moat around your companies, it not being too easy for other companies to get involved in what you're doing. And I like the fact that at least ARK invests in generally large companies that have been around for a little while. But obviously Tesla is its biggest holding, I think. Cathy Wood, yeah. Not something I invest in personally because I make my own choices, but yeah, it's interesting. Would I buy the Nasdaq 100 here? No, not for me. And it depends on your time frame, though. That's my advice, my opinion only, of course. Oh, you got Hub24, PJ. Yeah, I remember that company at like $1. She's flogging off the Tesla shares. Yeah, makes sense, Shane. Makes sense. What's her management fees? Yeah, 10% is in ARKW. I saw that. It's not so much that I like her holdings overall. I just think, yeah, Maria, I'll do pound Swiss before I end up. So basically, I like the fact that just the concept of the investments, disruptive investments. I've always believed in moat. I've always believed in the idea of having companies that can't be touched by little companies, cash flow, ability to invest during bad times, that kind of thing. That's why Buffett's done well as well. Like, people give him a hard time for not beating the S&P, but he's not really underperforming that badly. He's got a lot of high moat companies. I love them. Sleep good. 0.75 is not that bad for an actively managed fund. I understand, though, it seems a lot, especially when you look at ETFs in general and you get like 0.01, 0.03, that kind of thing. No, not ARK the crypto. She has to sell during going over 10%. Yeah, absolutely. So when you run a fund, the way it works is you'll have like certain parameters that you have to stick to, or you would have set your fund for parameters. She'd be running too much risk on Tesla right now. So she'll have to slip it, like cut some down. My biggest conviction stocks are always going to be the biggest ones. So my biggest convictions are really the sectors. I'm really big long-term healthcare. I'm really big long-term, obviously tech. Really big long-term. I'm actually a pretty big fan of things like iron ore. I do come from Australia, though. We do live in a land of brown coal and iron. Lines a Dairy Queen every time I drive by, and that's Warren's baby. Yeah, he loves that company, doesn't he? But actually, his real business is all about other things. Do I have any FMG? Not anymore, no. But Twiggy's the man. Twiggy is the man. All right, let's have a look at this pound Swiss quickly from Maria. But yeah, look, I've got certain sectors I really like, and then, yeah, I'm a big fan of real estate as well, hey. Nothing wrong with real estate. You know what I'm not a fan of anymore? These damn bonds. Too expensive. for what they are. They used to be so good. Bond trading used to be a thing that you would actually look at and go, this is worthwhile looking at. So yeah, I can see why you're looking at pound Swiss. I knew that it was coming back down. So previous resistance here, nice structure. We know how it interacted with the zone last time. I think with the pound Swiss, I'm never a fan of it because it hovers so much in its technicals. And I've mentioned that's because of the Swiss-like properties, as in it's the hedging properties of the Swiss franc. But in this case, I would say if it comes back down here, you're looking for lightning bolt action. And based on what it did previously, I'd only be looking at take profits up at the previous highs. So pull down to this 120 kind of area. Look for lightning bolts on the smaller time frame up. I quite like what is going on there. If we go down here, obviously that's a crappy looking candle, but that's why we look for lightning bolts. Probably need at least an hour kind of confirmation turnaround on this one. That's a 1 minute. We don't want that. There we go. Yeah, so strong kind of resistances off here. Obviously, this is the zone that you expect it to buy off. There was a pin bar here. Remember, pin bar, hammer, whatever, not good enough. Probably want it above this zone, as in like it closes above there. And then it'll probably go and try to shoot for that high again. So that's my thoughts on the pound Swiss. Let's go back over those markets quickly. Have a look at that Tesla. See what's going on there. Go to the US 500 again. Quickly check out that Dow. I'll answer a few other questions here. Now we've got lithium mining. Not really my kind of thing. I don't think lithium's that rare, so I find it difficult to invest into. We do have a little bit of a pullback now on the market. Going to go test that 3,500 again. We'll see how that's interacting on the 15 minutes. Certainly looks like it's trying to get through these zones, doesn't it? What's that? What's the Nasdaq doing right now? We still got VIX spiking up. Okay, Nasdaq showing more strength than the general market as a whole. Had these Yardini reports. Remember Yardini.com. I'm going to give this guy a plug. He does have some pretty cool charts and reports. Didn't get time to go through those today, but definitely check out this stuff. I think it's pretty good. It's just good metrics. I don't know about his paid stuff, but definitely think the metrics are pretty good. Is the VIX continuing to rise? Looks like it. No, I'm not particularly scared of iron ore overall. I think there's a dip coming though. I think that iron ore went too fast, too quick. But overall, look, rebuilds. I bet on the government money. Wherever the government money goes, I like. That's been my kind of play. Not quite getting your question, Shane. All right, I think I'll call it there, everybody. Thank you. I'll answer that maybe the next time. Yep, that's fair enough, comedy. I won't answer that one either just tonight. I don't think I've got time. All right, well, thank you very much, everybody, for attending. I really appreciate everyone coming out on the Monday. Remember, we'll be doing this every Monday that people are interested in it. Remember to subscribe, of course, like the video if you can, and we'll see you on Friday for another live stream. I may do an impromptu live stream if we see some interesting market action, probably more to the downside than up, just because I think that's always exciting. And not revisiting Tesla, not really. I'll revisit Tesla after it has a day of trade, so we'll check that one out later on. But yeah, I think that'll be best. No worries, everybody. Thanks very much for the support. I do appreciate it. Nice. I like that structure on silver and gold, by the way, right now. It's good. Okay, new stream improvements coming. Also, just quick other shout out before I end it up. What other video types do you want to see on this channel? What do you think will do well, everyone? Because I'm kind of burning out of doing my normal trading and running the YouTube. You'll notice I'm going a little bit slower because I want to just be in consistently. Doing every day, whew, it's hard. I don't know how. I don't think these other people have jobs. Crazy. It's tough. It's tough making daily videos because, you know, it takes a couple of hours. The technical ones don't take that long, but yeah, it definitely takes longer than you think. There you go. Goldman's into oil now. Be interesting to see if we see rotation into oil. More live trading. Yeah. Fundamental study. Yeah, look, I mean, fundamentals are cool. I definitely think that a lot of people like it. People can do it better than I can, though. I like TA. For me, fundamentals is I look at the basics. I look at the common sense approach of what other people aren't looking at. And then I really just apply the general rule of if you're getting growth each quarter, then you're probably going to continue seeing growth as long as they're putting the money in the right places and continue spending. Yes, that's a good one, David. We'll be doing that. Risk management and, of course, sector rotation, how to anticipate them. We'll be looking at sector rotation. I want to bring that into the live trading. Yeah, I think we'll do dollar cost averaging as well. Cool. All right. Well, thanks very much for all of the feedback, everybody. Remember to, of course, like and subscribe, and we'll see you next time.